Welcome to a Now Explain Rough Cut video. This video is part of our manual bookkeeping series. You can find related videos on our YouTube channel or search the internet for a Now Explain Rough Cut. So now, let's get explaining. What is a debit? What is a debit used for in bookkeeping and accounting? What you need to be familiar with: source documents and daybooks. And other terminology you should understand is double entry bookkeeping, the T account layout. What is a debit? A debit is used in bookkeeping and accounting to designate what type of value is held in a ledger account. Depending on the type of account it is: income, expenditure, asset, liability or capital and reserves, customer ledger, supplier ledger. A balance of debit on a ledger account means different things. Note, the word debit used in the following term has a different meaning to the term debit used in the double entry bookkeeping system. It is related to the process of customer and supplier credit control. That's the word debit note. Now, a debit balance on a sales general ledger account has a different financial implication to a debit balance on an expenditure general ledger account. A debit value on an income or expenditure account has a very different meaning to a debit value on an asset or a liability account. Debit is not a negative or a positive value. If the balance on a ledger account that is used to record an expense, such as stationery, and has a debit value, then this indicates that a stationery expense has been incurred. If the balance on a ledger account that is used to record bank account transactions, money in and out, shows a debit value, then there is money in that bank account. If that same bank account ledger shows a credit balance, then the bank account is overdrawn and indicates that your business owes money to the bank. What is a debit journal? A debit journal is used to reduce a credit balance on a ledger account or increase the debit value on a ledger account. For each debit journal, there must be a matching credit journal. Here's an example. If a ledger account holds a debit balance of 200 and a debit journal value of 100 is posted to that ledger account, then the debit value, the balance of 200 on the account, is changed to a debit balance of 300. If a ledger account holds a credit balance of 200 and a debit journal value of 100 is posted to that ledger account, then the credit balance of 200 on the account is changed to a credit balance of 100. And another example: if a ledger account holds a credit balance of 200 and a debit journal value of 300 is posted to that ledger account, then the credit balance of 200 on the account is changed to a debit value of 100. This has been an explanation of the bookkeeping term debit. A debit is used to designate the type of value held in a ledger account. A debit balance on an account can have different value implications depending on which of the 5 main account types it is in. A debit journal is used to reduce a credit balance on a ledger account or increase the debit value on a ledger account. Debit is not a negative or a positive value. For each debit journal, there must be a matching credit journal. For more information, please go to nowexplain.com. Thank you for watching.